Welcome back to the Something's Wrong Here podcast. I am Randy.
I'm Ken-Zee.
And joining us tonight, we have Josh, who is a CEO, business owner, philanthropist, volunteer, a little bit of everything. But the main reason we're going to talk to you tonight is because you're the CEO of Layup Trades. And holy shit, what a day we had in the market, and to talk about what is wrong with the stock market. So Josh, go ahead and introduce yourself, and let's get into it.
Like Randy said, I am the CEO of Layup Trades. We started back in 2017 sometime, me and my buddy in Chicago and down in Texas. We have a small group chat and newsletter that we send out weekly, just what we see in the market, our systems. Everybody has a different take on it. So we like to compare different options-based strategies and flows to kind of find our own kind of niche in the market. So
nice. So why does the stock market exist, and why do we put so much, I guess pun intended, stock into it?
Sure. So I think Warren Buffett said it best. It is the eighth wonder of the world, compounding investments and compounding stocks. A little bit at the beginning can go a long way in the end, and you can see that in a lot of startup names, and even in NVIDIA over the course of the last 4 or 5 years, with the stock going from $40 and $50 all the way up into the 200s before things came down a little bit heavier here in the last 3 or 4 months.
NVIDIA, who are they? What did they do? Are they involved in something that we all know about? Sorry, that's just me having fun.
Some AI stocks.
It's amazing. Yeah, AI stocks really. NVIDIA also, the way the stock market is weighted, at least the S&P and the NASDAQ, different stocks have different weights and measures. So like Apple, NVIDIA, Microsoft, they all carry anywhere from like 6 to 8% of the weight of the entire market. So as the top weights go, a lot of people like to call them the Mag 7, the Magnificent 7, because they carry so much weight, and with they go, the market goes really.
Is it good that we put so much weight in those top stocks, or should it be more distributed out, do you think?
I think in a normalized market like we have in pre-January of this year, it's okay to have those reweightings like they are. They balance them that way to try to drive the cost of the market higher. And with a low volatility market like we generally have, there isn't too much risk to that type of situation. But what you see is kind of what we have now is the decoupling of the idea of a normal market and of like a stable, non-volatile market. And so that's where we're starting to see a lot of those upsets in the last 2 or 3 weeks, really, with a lot of those, even Tesla, coming off 50 or 60% off the highs.
Yeah, and you brought up, the irregularities since January. I had some show notes for today, and holy shit, I had to go back and start rewriting and looking at it. From this morning, EU approved retaliatory tariffs. Trump raised tariffs to 104% on China, and then by noon, he's like, nope, I'm going to raise it to 125%. China retaliated with 84%. Then removed all trades for 90 days, except for China. The Dow soared over 2,000 points.
Removed all tariffs.
Oh, what'd I say?
Trades.
Removed all tariffs, sorry. And put those on hold for 90 days. And does your market outlook change from 9 a.m. this morning to as we're speaking right now?
Yeah, and it kind of speaks to the volatile nature of the market. The problem with volatility is it really feeds upon itself. I think the analogy is it's a snake eating its own tail, right? If it gets hungry enough, it'll just consume itself. Mm-hmm. And that's kind of how volatility in the markets work. In a normal market, or in a market before all of this, the volatility it didn't feed on anything. It stayed at a very minimum effort. And in a volatile market like this, once the cycle begins, the only way to really stop that volatility is for whatever the event is that started it to kind of just cease to exist in one fashion or another. And the issue here, obviously, is tariffs. That's what's spurred all of the volatility now. It reflects in like the Atlanta GDP numbers had us at something like minus 2.3% projected GDP for the next quarter. And those are the types of things. So when volatility gets this high, like the only thing that's going to stop this type of cycle is for there to be a final answer to what the tariffs are, whether that's coming to the table and everyone agreeing, or for this to precipitate. But at least the market knows that it will precipitate. Right now, it's here, it's gone. We're friends, we're not friends, and that kind of jostling is really what creates the problems that we see in the market right now.
Is the stock market relatable to a casino?
I think everything is an educated gamble. I mean, not just in the stock market or in the casino, but life in general. Not to be too philosophical. Yes, but I think like in a casino, you play blackjack because you have the edge on the table, or you play hold'em because you have a corner there, and house is only taking the big. I think in the stock market too, that's kind of how I approach it. A lot of portfolios play like a broad market type of situation, and I'm more of a picking stocks when they're doing certain things in the market. I look for like consolidation breaks, stocks that sit in windows that are very tight, and then once they break out of that creates a heightened amount of volatility to trade. And I think that there are certain ways that you can do that to find a corner. A lot of patterns in the market actually have statistical measures behind them, how far they can go and what the percentage of a breakout is. So yes, it is gambling to a point.
And I'm not trying to take this too far down a weird hole. You can see statistics and everything in a casino too. Obviously, sure. Like the movie 21 really kind of had a play on a pop culture reference to it, and it's a true based story. And again, it's just, if you understand statistical odds and you can do what they were doing, of course, that's what happens. The second that someone sees a loophole in the system, they're going to take advantage of it. And again, I'm curious, just your thoughts on the casino aspect. That was kind of a fun one. Randy, get back to you.
Yeah. So I guess I'll stick with that. We have Robinhood. Robinhood has made it so easy for just amateur traders to start throwing money at things. And I don't know the actual statistic. I'd say probably 90% of the time, people that don't know what they're doing are losing money to people that know what they're doing, just like the casino. Do you think there's enough people screwing around, just throwing a couple dollars here and there, that it's messing up some of your statistics that you're looking for, or markets, or anything like that?
I think it's a novel approach to that the small guy can make that kind of change in the markets. Mm-hmm. But I thought that way for a very long time too. And then I started to look at just the dollar amounts that flow every day and every second. I feel like we had an options expiry at the end of last month, and there was something like $14 trillion that expired in options. And so does it make a change to the broad market? I don't think it upsets many statistics just because of how large the actual market is. But I think that that's a good platform for novice investors and beginning investors to be on. Not to say that they need to lose their money, but I think with the right approach, that's a very good way to start investing for somebody who wants to get into it on like a ground floor level.
Well, they do kind of regulate it. What is it now? 25,000 you have to be able to day trade in your account?
Yeah, 25,000. Yep.
So you throw me a loop here. While what he was saying is like, can the day-to-day Robinhood, X amount of dollars here and there throw a wrench into the gears, I can't help but think of the GameStop horseshit that went down, and arguably some nefarity via social and platforming, in my opinion. That said, do you want to shed light on like what happens if there is some small gang of people that does something on I actually
had a question about it.
Like an arguably weird market though, like a GameStop. You know what I mean? Like what happens when you do see that? Like where's GameStop now? What can you break that for me?
So what they did with GameStop was they front load. So an option, you have the stocks and then you have options. Options control 100 shares of the underlying stock. And it's based on the strike price. So Apple at $100, Apple at 101, and 102, so on and so forth. And each one of those is worth the obligation of 100 shares of the stock. So what people do, or what they did in this case, was what's called front loading. And they went and they bought a whole bunch of options way out of the money, and they did it at a very, very small intervals through time. And because the stock has so few shares, it's at the time I want to say it only had like 45 million tradable shares, which is so insignificant. I want to say Apple trades like 200 or 2 billion shares or something like that. So a very small float. And so then what they did was they somehow it found its way onto social media, however that was, and
crazy.
They already had. Right, shocking. And so these guys that have already front loaded have all of these options, right? And they're all out in the way, out of time and out of the money. They were like $50 options, and the stock was trading like $10. So it shouldn't matter too much. But once all the momentum hit it, and everyone saw it, and it just kept coming, and there were only so many shares left. And I want to say the short float, so the amount of shares that were floated in the market were like 25% short. And so of the, call it 50 million shares, you had 12.5% of those were short, or 12.5 million of those were short. And so the shorts have to get out of their position because they're just getting manhandled at this point, while all of those longs are piling in. And so while all this is happening in the forefront, the options that didn't really control much pull because they were so far away, because price is now approaching them, and it's gamma of the option. It's one of the Greeks that options control. And so because there's so much, it's almost like a magnet. And so it ramps price even quicker into that magnet. And so through this forced short selling of everyone having to liquidate and the options complex being so far out of the money, it allowed for that spike.
They claimed that the initial start was via World of Warcraft. Way back.
Oh.
And that this started as while people were slaying each other online, nerds started with a let's save GameStop chat, basically through World of Warcraft. I'm just curious if that has ever rumor milled anywhere towards you, or
I've never heard that, but I'm gonna have to look into that now. That's really cool if that's how it happened.
I promised anonymity to this person, and I'm going to keep that, obviously, and I'm not going to say anything more about their gender or anything like that. They have a pretty valid claim, and the lifestyle that they live is either debt beyond their eyeballs, or they made money somewhere. and I'm just going to say, you know, I had to ask you because you were knowledgeable on the back end, and it's so dumb, but I happen to maybe know a nerd on the front end. And again, it's just nerds playing Warcraft.
You know, and that's the type of people it takes to know the Greeks and the mathematics and everything to be able to do such a thing, right?
Is it collusion, or is that just funny?
You know, to be fair, if what we have witnessed in the last 3 months isn't collusion, I don't know what has anyway. So.
Right. Was the same people behind GameStop the ones behind the AMC?
Yeah. Roaring Kitty, I think it is.
I can remember what it was, but
again, I think that was a major platformed persona. And I personally believe that there was a large group chat occurring in a very discreet way. I
think Reddit is where a lot of them jumped on.
Well, Reddit again, I think is post World of Warcraft, from what I'm understanding.
Yeah,
because World of Warcraft was where it started as like this discreet kind of idea.
But with like the AMC, they cost people billions of dollars, and you know, what did they find out? That a hedge fund was shorting the AMC movie theater, so they got everybody rallied together, started buying stocks and holding stocks and buying calls, and ran the price up. And I think that hedge fund actually had to go borrow money from other hedge funds to keep from losing everything, didn't they?
Yeah, there was some sort of measure that they had to take to refinance their debt. I was pretty sure, yeah.
Wow. Well, it's amazing what a few people getting together on the internet can do. I mean, do you look at that, or I don't think anybody was prosecuted, but isn't that kind of an insider trading, or is that just what hedge funds do? They just pretty much did what the hedge fund does and use the internet to gather all the money.
Yeah, I mean, it's really hard to prove the collusion, and even if, I mean, boy, just look at the trading world, even from like Congress, right?
Mm-hmm.
How do how do you try to take a group of Joes to court over that? And then you have the Pelosi's of the world trading how she trades, just all open and honest and making hundreds of millions of dollars every year on information she gathers. You know what I mean?
No, Paul is a good guesser.
Yeah, Paul,
right, yes.
Paul knows
he is a fucking amazing roulette player. Just slamming double zeros on that green every time.
So you said the market's really volatile right now and everything. The theory is buy low, sell high. Is now a good time to load up and hold and wait for the market to even out while everything's kind of at a discount, or are you still sitting it out for a little while?
Well, if you would ask me that question at the beginning of the day, I would have had a greatly different answer for you, because I read through your questions last night and I was like, going to pound this one in real well.
Right.
But after a 10% rally, it's really hard to be like, put all your money into the pot, right? Chasing, as they call it.
Yeah.
We were at a really stable point. What I look for, I look at all the stocks, like we were talking about the top weights. I look at like the top 12 weights. Apple, Microsoft, Tesla, Amazon, Google, NVIDIA.
Are you using like Fibonacci, or are you going into even more detail?
So I do Fibonacci, and I use volume profile as well. Just a lot of like supply and demand based tools. And I look at them individually, and I look for support points in all of them. And when they all come into those types of points together, that's when I generally like to deploy funds. Just because, if that's what the market really is, if they're 29 or 32% of the weight of the whole market, and it's only in 12 stocks, it's easy to say that if those 12 find a bottom, most of the market's probably going to find at least a temporary bottom as well.
Yeah. Why is it that markets always thrive in times of turmoil, like war, pandemics? We see that huge spike every time when we have a war. The war got us out of the Great Depression.
Question stealer.
It all seems to really spike in bad times that you think it wouldn't.
Sure. So I think the Great Depression and the pandemic are two very different examples. But so, for example, in the Great Depression, during wartime, the industrial complex was what carried the weight of the markets, right? That was when the Dow Jones Industrial Average was the major market. There weren't any of the subsidiary markets at the time. You were looking at the Caterpillars, the John Deeres, Rolls Royces, stuff like that manufactured these things that we had to have for wartime effort. Mm-hmm. Even to the fact that during wartime, the government can't think of the title of it right now, but basically they can go to machineries and industrial complexes and say, hey, for now, you're going to have to stop doing what you're doing, and we're going to pay you to make the things that we need you to make for us. Mm-hmm. And so these ideas of all of the money going into those types of markets is what rose the market through and out of the Great Depression, was the need for all of the things that mattered the most at the time. Mm-hmm. Whereas if that would have happened nowadays, for example, that's why you don't see war so prevalent in the markets anymore, because you don't have the Lockheed Martins and the Raytheons of the world, the Boeings. They no longer control a large percentage of the market itself. If you go into the Dow Jones, obviously they still control a very large chunk of it because it's the Dow 30. But in the markets that most people pay attention to and invest in, like the SPX, they don't really carry as much weight anymore.
Question.
Yeah, go ahead.
I guess question on the core concept of what we were just talking about there is, my thought immediately hit unity through tragedy. I sent Randy a graph earlier, and it's kind of an awkward sinusoidal wave at about a 3-degree slope. And that is, if you watch the American economy, and in the times that we are in conflict, our economy is up via unity on whether it's what I like to argue a trigger word, which is terrorism and things like that, or whatever it is, it's the war machine. And I'm just curious, what are your thoughts on the market with unity through tragedy and mainstream media's contribution to that? Because can I give it a little bit more on that, actually?
Yeah,
back it up. But there's this guy in Omaha, and he lives in a modest house, and he's stockpiled a lot of cash. Why? Why is one of the smartest guys stockpiling cash and not buying all the market right this second?
I'm assuming you're talking about Buffett, right?
Yeah. And that's just a question that I ask based off of, again, going back to the mainstream media pumping with the illusory truth that the market always recovers. But is that a good faith statement that keeps the market going?
I mean, the statement itself obviously is correct, but it doesn't suggest how far the market must fall, right? It just says that at some point, the market will go back. And so, for example, like today being a 10% bounce in one day, it's almost unheard of. Actually, it is unheard of. And for that reason alone, I wasn't even at my computer when it all happened this morning. I was at the office, came back, saw it, and I was talking to everybody in the room. And I said, I'm not chasing it. We're already up too high, right? I'm not. All you got to do is just pull the rug, and it all comes back down on a move like this. And so, but to double back through your unity through tragedy, I like that actually. I've never heard it put that way, and it's true. And I think the underlying concept of why it's true is interesting, and that's because when tragedy occurs and when the markets start to come down, there's a group of individuals that are there to basically backstop our economy, right? And that's the Federal Reserve. And I know they play both sides, the villain and the hero, depending on who you talk to. But really, that's what you see when in 9/11, for example, or even in the pandemic. The pandemic also was spurred on by just a lot of surplus cash going out by all governments of the world, driving inflation even higher.
No argument.
But through those two methods, either the country's monetary policy or the federal monetary policy, that's why you see those types of rebounds within the market eventually. And then the Fed's path is to try and make sure that the inflation from those bounces doesn't get too far out of hand. So yes, unity through tragedy, but because somebody is also backstopping it all to make sure nothing goes too awry. And that's because it's an event that we know and we can control. Like, it's a one-off event. It's a black swan event. The pandemic had a starting point, and we knew it would end and went about when it would end right through science. 9/11 was a one-time event. We heightened our national security. We invested in ourselves, but it was a one-time event. And that's kind of how the difference is in this event. Is it's not really over yet, right? We don't have a resolution to the tariffs. We don't know if there's going to be a 280% tariff overnight. We don't know if they're going to be pulled from somewhere else. And that's why this bounce or this move that we see higher today is one of those where I kind of step back and I'm like, is this really where I want to start positioning a large amount of money? And if through the course of the next 2 or 3 days we see this bounce hold and we see stability start to come back into the market, the volatility measure, the VIX, right now I think it closed at 36. It really needs to be back below the 30 level mark.
I've been tracking that.
What it just shows is like the removal of that volatile nature, right? It was at like 58 today. It usually sits down in like the teens in most eras. And so we would want that back under between that 20 and 30 mark. And that'll really show us like, okay, people aren't rushing for puts in the options market. That's what the VIX shows, calls versus puts being bought and sold. And so if we see the VIX come down, we know that there's no one's seeking that protection anymore. The larger players in the market think, okay, we can stop, we can reposition ourselves, and maybe we can start a path forward and climb back higher again.
So if I may transition you a bit here, but in the same, with you tracking the VIX, that's something I also keep an eye on personally. One of the others for a long time, and this was, I won't lie to you, it's because of the Big Short, the ABX. That is something that, I mean, we're sitting in the county that absolutely fucked us. I mean, absolutely fucked property owners. Came out, personally, ours went up. They estimated it going up, our personal property, at 86%, and then it went up 91. I've never been underestimated by a fucking by a tax estimate on that.
Right.
Yeah, no. So that happened all around. Randy can attest to that. So
lots of lawsuits.
I've been having a lot of questions about the ABX too, and like where that stands and where people are, because a lot of people have a lot of mortgage comments and bitches on Facebook. You got a lot of people upset about things like that. What are your thoughts on the economic collapse of 2007 and a rebranded, repurposed version of it in the near future?
I think you're always going to see the divide that splits the middle class into the lower class and the upper class. I think that's going to be something that we always see play, and I don't think that's any different then to now. The problem that we're going to continue to face now is we have an inflationary monetary policy within the country, and that's only going to hurt the consumer. It's only going to make it so they don't have the capital to spend on rents and mortgages. It's only going to make it so grocery bills go higher. And I mean, this is just, I mean, I'm not even trying to talk ill about anybody. It's just how the policy is set. That's just how the economic drivers are. And the problem, and through those types of actions, it can create what we saw back in 2007. Even looking at housing prices today versus 2007, they're trading at almost like a 2.5 times multiple on the closing costs.
And can I ask you one just core human question here? If shit hit the fan and it was feeding your family or paying your mortgage, are you buying a gun and sticking it out in your house and feeding your family with the money you have, or are you paying your mortgage and hoping your family figures it out?
Well, I mean, there's no doubt that you're feeding your family, right? What you do with the other side of it is completely up to you.
I am terrified of that ABX, man. I am terrified.
I think that the thing that exists now that didn't exist then, or doesn't exist now more so, is you have companies like BlackRock that are basically providing a sustaining bid that's actually above the market, and that's what's keeping that crisis from evading, right? You do still have delinquencies in mortgages right now. They're actually being higher and higher, but you're not seeing a housing collapse because there's somebody under those just picking all those houses up and just kind of scooping them in, not to fuel your measure here. But, you know, it is a thing that does exist. I mean, it's the stats are out there that show that is what they're doing, and that is why housing prices are so high right now.
It also, last part of that conspiracy, sorry, Randy. Last part of it is the it's actually featured in the movie Twisters, and it's when storms or natural disasters come through, and basically people find out they're fucked because they're underinsured because they don't know what an insurance policy and the 133 pages or whatever of underwriting bullshit comes with it. They don't read it. No one reads their terms of service. I guarantee you no one on this chat right now has read their terms of service on their phone through and through. Especially not every update. So
I do not have time for that.
I'm just saying it's one of those where in a real sense, like what you're talking about, that land grab is fucking terrifying on that ABX. And the reason I say it is they have a fiduciary responsibility to shareholders at the end of the day. So
well, that kind of segued into what I had. You know, during COVID, we saw the huge spikes in houses and everything, and you brought up, you know, that BlackRock's coming in and making houses unaffordable for everybody. With that issue, don't we kind of need the stock market to crash so we can get the middle class back into affording homes and home prices coming back to that average that it should have been back when we were pre-COVID and everything?
I think the issue with needing the stock market to crash is that we have to realize that the very groups of people that are buying up the houses have so much money right now that the markets would have to do something where large companies lost that and the middle class actually got it, right? We need a way that the middle class has enough money and enough buying power. Right. I mean, can it work that way? Yes. Is this the way that it's going to work for the next 4 years or the next 8? Definitely not. Would it be nice if that was how it was? Yes, but right now corporate taxes are getting cut. You know, there's a drive to cut the upper tax brackets as well. And so again, the people who are left holding the burden of this process is the lower and the middle classes. And I can't picture a way that some major conglomerate that has been buying all these houses is just going to be like, never mind, I'm done. You know, I'm reversing this course. I mean, they would have to really, you'd have to like Dust Bowl, right? You'd have to Great Depression it almost, I would think, for that company to go broke enough to have to relinquish those.
And the bad thing is if they all go broke, we all go broke because they control a large portion of our retirements, our investments, everything else.
Well, fellas, let's be very, very honest with each other for a second here. I love zoos. And going out in nature, touching nature. I love seeing animals, you know. Don't get me wrong. I don't love captivity of zoos. Whoa, don't fucking come at me for this. Josh, you seem like a smart fella. I'm just going to ask you a question. How many other species in nature have a middle class?
Well, I would assume probably zero. Most species have a hierarchy of dominance to some measure. I don't know if there's an upper, middle, and a lower, but there is an alpha, and a beta, and then it stems out from there for most. But yeah, I assume, to draw to your point, none.
And no cheetahs are out there selling fur coats. Let's be honest; they're making no points of contention with money. That's what it is. Well, and I get
it's like asking a question like, what other animal group has a capitalistic society?
Oh, that's where I'm heading, babe. That's where I'm heading. So if the stock market's kind of like a casino, and I find myself not losing money on betting by not going to casinos and just keep what's me and mine, what's my incentive to jump in on the casino? I get there's a what if, but right now the volatility is terrifying, right? Or I guess I'm going to describe it as terrifying. Sorry, you can comment with your words.
That's a good word to use. I manage a little portfolio. It's my portfolio, but I share it with my chat room. They can access it whenever they want. And I've been, I want to say, 80% cash for the last 2.5-3 months. I didn't want to even worry about investing. Kind of to your point, we kind of knew what was coming down the pipeline. We heard about the tariffs. We didn't really expect them all to come, and then they did anyway. So why invest now? It's really hard to say that that's a great idea to invest right now. Why to invest in a broad term, I would say, is because a year-over-year average over the last 100 or so years gives you a 12% gain on your money every year. And that's just in the SPX. And then that's going to compound on top of itself again. Mm-hmm. And that's assuming that things are going to be lower in a volatility nature, but it's still going to progress in an upward trend like we still see. Doing that now is just a little bit more sketchy. If we see the resolve of these tariffs or a reunification of everyone, unity through tragedy, if you will, of the entire globe, possibly then we get to a market where buying the dips is a better structure. But right now, to me, it's more of a stock picking type of market. What isn't going to be affected by this? What is made in the USA? What types of markets are we going for? Industrial markets, Caterpillar, things like this that we know we need to spur the policies and the directives of the current presidency.
Yeah.
Great take. Thank you, by the way. Great take.
Well, we keep talking about these tariffs and how much it's affecting us and everything. What is a tariff? I mean, what's the easiest way to describe it that you see it as without using the exact definition?
So if I'm going to sell you something to Randy Land, but Randy Land already makes it, but I sell it at a cheaper price than Randy Land does, then Randy can slap a tariff on my product coming into his country, and that's going to increase my product coming into Randy Land by a significant enough amount of money that the product that's actually made in Randy Land will be more affordable and more appeasable to the consumer there. So that one that is domestically made at Randy Land is better than the one from Joshville. And so the one from Joshville will no longer get bought. It'll be more produced from Randy Land, and then the economy of Randy Land generally would grow. But the cost of that, the cost of the tariff that is applied from Joshville is applied to the product at Randy Land. That way the consumer doesn't want that product itself.
Yeah. So would this be the equivalent of when I call my T-Mobile customer service and I get Barbara, but she definitely isn't from America?
Barbara from the Philippines?
It just definitely happens to be someone, unfortunately, in a position somewhere that's what they got to do. And it's one of those that I hate, the outsourced labor aspect. I absolutely fucking hate it. And with the technosphere I believe that we live in, as a third American revolution, or a third revolution, if you will, it's pretty wild at this point.
So you explained what the tariffs were and everything. We've made it out to be that these tariffs that Trump has been putting in place are these big, bad, horrible things and stuff. But I mean, there's 170 countries, I believe, with tariffs against us, and Canada has like a 300% tariff on poultry and everything. Why is it such a big deal now that we want to even up that playing field so we can keep money in America? Why do you think so many people are so upset about it? Yes, I understand it's going to cost us a little bit more, but in the end, isn't it creating jobs and getting inflation down and everything else? Where's the anger stemming from?
I think that the message from the White House and the presidency is that these large tariffs exist, but they don't classify why and what portions of these tariffs exist. Like the poultry one from Canada, for example, there's a certain threshold that has no tariff on it, and once we hit a threshold, then a tariff is applied to it. But we have to also consider that Canada has the population of 1/4 of the United States, so they're not going to be consuming as much as we would consume from them. And so I think that's where the divide lies, in between the message that comes from the policy directive and what really occurs. You can't expect that Canada, who has 1/4 of the population, would be able to satiate the same import and exports that the United States does to them, right? That's just a logical idea. We're not gonna, if we want to send them oranges, and we only need to feed 25 million or 25% of the population up there, then they're not going to be able to export something to us. They're going to need to tariff that product because they need to be able to create that economy within their own country.
Gotcha. Well, thanks for explaining that, because that's an easy way of putting it all. So do you think the market is due for a pullback? Hasn't it been needed for quite a while? We've just been on this constant upward motion, and there really hasn't been a huge pullback for quite some time. We haven't really seen a bear market since, COVID happened. We had that downward, but it just jumped right back up with all the stimulus and everything else. What's your thoughts on needing a pullback from the market?
Yeah, markets always reset. Usually it's through it's called a black swan event, something that no one really foreshadowed coming. Pandemic, 9/11, et cetera, et cetera. But the general idea is that the market, without volatility, will continue to trend up. And when it trends up, it does so with so much liquidity provided underneath it, because people will put their money forward when there's very low risk to a volatile market, right? So JPM and BlackRock and all of these large companies will bolster the market, and they'll have hundreds of millions of dollars sitting underneath all of the stocks in that type of market. And so that's why you see this trend up environment. And through those black swan events that we have, it allows for the structure of that market to kind of correct. It's always going in an upward fashion, but what you want is levels created in the market, right? Almost like shelves of stability at price ranges. Apple at $100, Apple at $120, and you want it to flat there. And what that does is it's kind of balancing supply and demand at certain price points, right? And so that creates the stability for that next leg higher. But what we see in these non-volatile markets, like like a Joe Biden market or markets of yore, was when things came straight up, they didn't create those levels of support. And so now what we're doing in this broad market, through this crash that we're going through, or this bear market, is we're moving through all these levels that were never set. There was no level set at the $100 or the $120 level. There was a level set at $150, and there was a level set at $80. And so what we're doing is we're collapsing through from a supply perspective up at the top, and we're seeking the demand through the knowledge of like a volume profile and knowing where all those stock or where prices traded in the past and how many shares have traded at that price point. And if we know that at $80, 800 billion shares were traded, that means that those are probably all sitting there and ready to add more to their portfolio, because if I bought it at 80 and it went to 150, I'm better buy some more at 80 again.
Right.
And so that's what we're seeing right now. We're seeing those corrective processes. The top 6 stocks, like I was talking earlier, they all reached those types of points here in the last week or so. The question for me is that the bottom? Did we do enough? Have we put in enough of a floor? Or is this 90-day tariff kick the can down the road? Are we just going to see this volatility again build upon itself because the event itself has ceased to exist?
Right. We see a lot of positivity looking forward because there is a pause, but that doesn't mean that anything's going to get accomplished in that 90 days, and we could be back to square one, if not in worse shape than we are as of this morning, that we saw, a huge downward and then giant upward again, just because there's always the unknown and everything. I wanted to get your thoughts on this. I have a theory that the market's kind of overinflated to some extent.
No shit.
You have the students who are getting out of college and they're going to get their jobs. They're $200,000 in debt. They're starting out directly out of college, $35,000, $40,000 jobs a lot of times, just enough to barely pay their school loan back and eat. So they're moving in with their parents instead of buying that house, because I think to buy the average house in America right now, you pretty much need to make around $110,000. And that's pushing the bare minimum. So I think that a lot of the market has been overinflated by these people that are moving back in their parents' house. They can't afford to get a house. They can't afford to really stimulate the house market, but they have a little extra cash to buy the luxury goods, the shoes, the TVs, the few things to make their home nice and to be able to go out and drink and all this other stuff. So they're buying things.
The largest shoe collection I've seen. I'm just womp.
Right?
Osco, look to your left, bud.
Yeah.
What do you got?
So they're buying things and overinflating the market when it really shouldn't be, because we're actually hurting the market because we're not buying houses. We're not buying the essentials. We're buying luxury goods that are pumping money in. Is any and all money good, or should it be for essential items?
I think what you're talking about is consumer discretionary spending or consumer goods spending. Mm-hmm. And a lot of that, especially technology-wise, technology-based, NVIDIA, Apple, Microsoft products, that type of stuff, the type of chips that are in the computers and all the AI that people are buying, that certainly is helpful to drive the market in that direction, like we talked about, because of the weighting of the market. Things like Nike or smaller brands like that, not smaller brands, I know they're in the S&P 500s, but the ones that don't hold as much weight to the market itself. While those stocks are going up, they don't contribute as much to the market going up as like your NVIDIA would, right? Mm-hmm. But your PlayStations and Xboxes all have chips in them that are all made by these top manufacturers. All the cloud-based. Right.
Taiwan.
All the cloud-based programs are that everyone uses to game, which is a big component to like Amazon services. And so those types of things that consumers are using are definitely helping to move the market forward. You also have to consider places like Tesla, who buy hundreds of thousands of chips at any given time. They are also big drivers. A lot of the top weighted stocks feed themselves higher revenues, right? Because they need to use each other's products to sustain in the ecosystem that we're in right now.
Unity through tragedy.
And so, right. It seems to be a reoccurring
it's vice versa there. Unity before tragedy, tragedy via unity.
Well, you just brought up Tesla, and I did have a question for you. Ooh. That you chose to get rid of your Tesla for personal reasons and stuff, and we live in a market that's awesome because of that. We can choose what we want because we like it and everything, but a lot of people are looking at Tesla to fail and wanting Tesla to fail, and you keep bringing up that those stocks are in the top tier. What would it hurt us, the employees, everybody else, if Elon did fail and Tesla went under?
I mean, so Tesla carries about a 6% weight. So, I mean, if Tesla theoretically went to zero, it would impact the market by 10 to 12%, just off the get-go. But I would think, stepping back, it would be more impactful from an employer base. I think Tesla employs about 120 to 130,000 employees right now, globally. That's really huge for our current workforce, especially when we struggle to find employees to stick into such positions in the market. I know for me personally, it was more just a morality based thing. I grew up. I mean, I got my first Tesla in 2016 when they first started rolling off for mass production. Innovation, change, drive. SpaceX, pioneering humanity forward, I think was always the credo of Elon. And so I felt like he faltered a little bit for me. And so that's the reason I got rid of it. Nothing to him. I mean, he has great products. He has great companies. Everything he does is, stellar in technology. For other people, I get the animosity that they have. But I don't think they really look at a global picture of what would happen if the company of Tesla failed. I think they are more just so vindictive towards Elon and just the idea that he now, or the policy or the base that he now holds, that they really don't care what's in the way, or maybe they just don't think about what's in the way or what that would do to so many people.
I mean, do activists really think about, well, I could be affecting multiple people, or is it, no, I want to affect him directly? And I think that's what it is. They're not taking the time to think about the downhill effect. It's just, I don't like him, so I want to make my statement that I don't like him.
You got dum-dums everywhere. I'm just gonna. You got fucking idiots, if you prefer it that way. I was trying to be at Baby Shark on the way. Dum-dums are everywhere, man. Let's be real. You got people driving away from firebombing a goddamn Tesla with a coexist sticker on their Prius. Fucking make it make sense.
Right.
I'm just gonna be honest about that. Like,
at the end of the day, tearing apart a few stores or a few Teslas isn't going to break the company of Tesla, right? Tesla is more than a car company. Tesla's a battery company and an intelligence property company, a GPS company,
and
an
Josh,
AI company.
You might even be able to tell my friend Randy here, Tesla, with this bad publicity of all these fire bombings and bullshit, it's actually all publicity is good publicity, right?
To a certain individual, right? To somebody who has a capital sitting and waiting and for the right prices to buy.
All right, Josh.
Like you talked about, buy the dip earlier.
I completely understand and agree there, brother. I've got a question for you that's been burning. Right now, I have two weird hypotheticals in my brain, and I want you to speak to the market volatility to this and where it might exist. We are, according to everyone, halfway in a recession, halfway leading to a recession, in a recession, depending on which expert you follow. Where I struggle with markets, the volatility, etc., would invading Iran be a portion that would help us, or would it be better to negotiate peacetime with Iran and get barrels below $30 to bring Vladimir Putin back to a humble table?
I mean, OPEC production is more than just Iran, right? Though
it is. They're just the last of the 7 on a certain document.
It's true. If we want to play conspiracy theorist, I can do that with you real quick.
I don't want to play it too hard.
Well, it's PG-13. It's the one that I care.
Perfect.
So, here you go. There have been many times where Elon Musk has come out publicly and said, you don't want to short the ZN, you don't want to short the US. It's going to go higher. And in the same token, the United States each year has to refinance a certain apportionment of their debt, and it's refinanced at the yield of the U.S. 10-year at that time. And so the idea that exists now, or that a lot of people are starting to finally point to, is that through the tariffs and all the words and all the actions that Donald has taken, is what he's done is he's driven the U.S. bonds up. And so when bonds go up, like Elon so politely said that they would, the yield comes down. And the yield is what we refinance our debt upon. Mm-hmm. And so our debt, it's continual recycling of the refinance, but the biggest portionment is in June of this year, right? It's like $7 or $8 trillion that we refinance. Some small number.
Small number.
And so
that's what I have in my back pocket.
Yeah. So what the general theory is, or the play to, is that what he's trying to do is create a market of such instability that it drives the bond up, the yield down. We refinance a $7 trillion debt at, say, 10 or 15% lower than it was when he got into the office. From that price point, it would save, say, 70 billion every year, compounding at the 10 years that we would have held the debt. And so then that gives the US that much more money to say, hey, look, we have this on the balance sheet. We're plus $60 billion this year, for obviously just to spend it all back. But that's the conspiracy theorist in me, just seeing how everything is playing out. Now, if we get to June and we get to July and we refinance our debt and, we don't start backpedaling a lot harder on what we're doing, and we just keep pressing forward, then we probably have a lot bigger of an issue moving forward into the next, 3.5 years.
The same debt that we're talking about here, that's the same one that we haven't been debt free since 1836. That's the one. That's the debt. Okay.
Yep.
Neat.
Yeah.
So as population grows, we print more money, and as that grows, debt grows, and we roll it over and just fucking don't care. So my conspiracy theory, Josh, here's the fucking honest truth of it. Have you ever seen the show Whose Line Is It Anyway?
Some of them, yeah.
Yeah, money is the system where the rules are made up and the points don't matter. If you have enough of it, you can get out of anything.
And the debt does always get larger, and that's always like a point of reference. And at some point, it is going to matter when we have to start paying our interest payments on the debts, and they're so large, they're higher than our GDP, right?
That is a problem for our kids.
Yeah. That's, maybe our kids. Maybe us. We'll see.
Not mine.
But the U.S. economy, though, I guess my point was that it's not really built on that debt, right? That debt load, because we are the global currency provider, we are the reserve currency, and because we are, and through the divide between the government and the Federal Reserve holding two platforms individually, we're entrusted with holding that type of debt. And for that reason, and because we can always refinance it, it really isn't a corrupt to the economy itself. Until we get to the point where the interest payment is larger than the GDP, and then we don't have any money. But we haven't got there yet. So
that's a plus. So before we wrap this up, I had a few more questions for you, Josh. Give me your overall thoughts on crypto. And is it a scam?
I mean, I wouldn't say it's a scam. I think anything where there is a competitive market of supply and demand is tradable. I mean, you see that even in, baseball cards and things like that. I think that enough people hold crypto coins that it will always be a tradable asset class. Mm-hmm. Just like gold and, silvers, anything like that. But for it to become a major player in the market space, to overtake, the dollar, for example, there would have to be a reason for it to occur. It needs to go from a novelty to a necessity, right? Mm-hmm. Just like the internet did. And until we get to that point, it's just going to be its own asset class. And there's going to be people, you have stable coins, and then you have meme coins and all of these other things. And the meme coins are just the gray sheets and the pink sheets of the stock market world. Yeah. And then you have the ones that actually provide a service. Your Ethereums, for example, that actually hold a principle and a reason for trade. And then of course Bitcoin, because it's Bitcoin, right? It's the master class. You have MNSTR investing billions and billions of dollars into it. And so they'll trade as asset classes, but they're more risk on asset classes. And you could see that even through the drop in the last 2 or 3 months. They shaved off a lot more of their percentage gains than even the top weights on the NASDAQ did. Yeah,
they were around 100,000, and at the low, probably 74,000, so about 25% loss.
Yeah. So
26, and you saw, I did the math there.
Close.
And I want to say that the only top weight that beat that was Tesla in itself, and I mean, it had its own, problems. So, but yeah, I think they'll all be tradable. I think anything where there's a multitude of people that want it for just a penny less than the person before them had it, there'll always be a market for that.
I know this is a weird digression, but something you said there sparked this question. With regard to fraud, there's always fraud in the market, and whether it's a Bernie Madoff or a Sam Bankman-Fried or whatever you believe in or don't believe in, was that our worst one that we're going to see for our generation, SBF? And, Was that the scariest thing that we see in our generation? We got it out of the way and we're good, or is that
growing up in
the tip of the iceberg?
1986, there's probably about 100 more oh my gods we have left in us. I feel like every 5 years we're at an oh my god at this point.
100 left in me at 5 years is 500 years, Josh. I'm starting to think you're not a numbers guy.
Get ready, one in every day.
I'm starting. So they're just a terror every day rather than yearly.
It feels like it.
Well, and you got to consider. A lot of the policy change and directive right now is removing a lot of oversight from the SEC, the FCC, all of these companies, all these branches, the FDIC, all these stock market went off in my ear. All of these lettered abbreviations that are really supposed to be protective of our capital, and watch out for fraud and abuse. So do we see fraud be persistent over the next 4 years? Probably not, because no one's going to be looking for it, right? But do we see it come back if the Democrats take office after Trump does? Probably. That's probably when you see more of the Sam Bankman-Frieds pop up and out. I would guess.
Fair enough. So we saw a big boom with AI recently and everything. What do you think the next industry is going to pop up and be the next big thing?
I question if we haven't seen the end of AI, or we haven't seen the end of AI. It really hasn't persisted as long as the .com bubble, for example. And we really still are in the infancy of development of AI. I think it really depends on if the NASDAQ remains weighted the way it is and it gives preference to the technology sector the way it does, if it continues to bring the market forward. But in general, I don't really think we've even seen the start of AI in the U.S. markets. You can look around the globe. Japan and China, for example, have some really stellar AI programs right now, and I haven't even seen us touch to the cusp of it yet. So I think there could be a lot more drive in innovation, especially with NVIDIA coming off. I think it was trading at $93 or $94 today or yesterday. It really lost a good percentage of its share. And those are the types of stocks that they're going to continue to exist, right? They're the always around, the AMDs of the world.
Which I actually have some shares in that, and it bounced today 20%. So
yeah, they did a hell of a job today. The the SOX, the semiconductor short market, it was down 85% or something today, because all of those stocks underneath it had rallied so hard.
So,
but those are the types of things that you're never going to get rid of, right? Or if you do, good God, where are we at? Are we in an Orwellian society? Where are we at? If technology ceases to exist, we should always assume that we're on a curving path forward through technology, through time, and that's how we should. So, I think NVIDIA at a 30% discount is amazing, really.
What would happen in the market, hypothetically, if China invaded Taiwan and took it over today? Because as of current, through war games, exercises, our own DOD, our own Pentagon, our own people have multiple times said over again, without the use of nuclear weapons, we can't win against China in Taiwan. So,
you're talking about you're talking about a global armament and a global world war. So, not great things, obviously. You have to consider that just outside of the idea of 2 of the 3 major superpowers going to war with each other, we also get a majority of our chips and chip stock from NVIDIA and TSMC, which is housed in Taiwan.
So we would fight.
So that's gonna
hell, probably.
Yeah, I think it's interesting. It's an interesting concept that people see that engagement occurring or potentially occurring. I think we've been able to set a pathway forward with China. We provide something like 90 or 93% of all of their imported grains into the country. The U.S. Navy actually imports them to China. It's not even a paid for thing. We provide so much of China their agricultural product, that for them to do something such as that nefarious against one of our allies would, while being detrimental to the globe, would be so detrimental to their population that you really have to step back and be like, is this a thing that is constructed for us to worry that it will happen, or is this actually a worry that can occur? And to me, it's just a constructed worry for us to think that there's a problem, but I don't ever think that you're ever going to see that engagement. I mean, at least not to a point where our current status with China exists, right? Where we are the provider of all these things. But then, of course, you have to realize that policy now dictates, like through USAID, that some of those programs no longer exist as well. And so if we strain the relationship that we've already built over a period of so much time, then yes, that could be something that would occur, but it would have to happen after China solidified itself and all of the things that it needed that the U.S. already has provided.
It comes back to, is our bigger threat China, Russia, or is it all manufactured?
I mean, part of me always wants to say it's all manufactured, right? Because part of me just wants there to actually be a real outstanding peace that.
Oh, goddamn liberals!
But in a capitalistic society, the system doesn't thrive on peace, right? That's the whole idea. You know, you create this angst and this divide, and it personifies and it creates a better economy. Who's the biggest worry for our, you know, as a war adversary? You have to consider that Russia's probably pretty depleted from its bombardment of Ukraine over the last 2 years, 3 years. They probably don't have too many armaments, as we've seen before. Like we talked about, China, they rely on us too heavily for economic and development of the humanity of their country. You lose the bearings if you, I mean, hypothetically, well, not hypothetically, all the ice is going to melt. And then Russia's going to have access to a lot more ports and free access to the Arctic. And that's why the war in Ukraine started to begin with, was they really needed a port that was valid for them when the winter freeze came, right? It was the only, Crimea was the only valid port that they had. Everything would freeze. They had no way to import and export. And so they said, hey, we're going to take Crimea from you, and then so on and so forth. And now we're here. So, I mean, on the upside, I guess you lose the need for Russia to continue war with Ukraine if Ukraine still exists at the time that all that unthaws. But I guess then you really have the problem of, you know, the climate change through the process of what has already happened. And that in itself is going to be a threat to humanity. Even Department of Defense says that climate change in the next 20 to 30 years is one of the greatest threats to humanity globally that exists right now. And it's really downplayed by, you know, the, oh, climate change, haha. But I mean, when the Department of Defense is saying, hey, this shit is about to get real and it's going to be the biggest threat that we see, it's kind of something to sit back, take pause, and realize that maybe the globe is going to change even in our lifetime.
The argument that I have right now with this manufactured background thought process of Russia knows that they're hurting from Ukraine, they invaded them because they dammed up the Dnieper River. The first thing they did is blow up the dam. Water, source of life. I'm most terrified of water. Now, the next part of this bubble that I'm going to bring up involves water. Why are so many people fighting California and Florida-based insurances? Why are floodplains becoming so much more evident and becoming a problem for insurance companies to cover? Why do insurance companies pay climate scientists, climate people with qualifications across the board, whatever you want to make them? Why do these fucking people exist? It's to tell insurance companies, hey, FYI, shit's about to change. Hedge your bet.
I feel like they've told everyone to hedge their bet. And even the insurance companies, through their processes and policies, are telling people, like, this isn't smart, right? When insurance companies will only insure one home in Florida, and then if you rebuild, they won't insure the home you just built.
Yep.
That should tell the, you know, the consumer something. But you know, oh, that won't happen in my lifetime. Oh, they're just this is just a rhetoric. But I mean, if you look at the core of it, it's just another thing that divides the masses into, right? Climate science, yes or no, Democrat, Republican, color, race, creed.
To me, it's the cute distraction of politicizing everything, creating a distraction, making it whatever. And the thing about it is, fuck around, find out. The kids these days say the greatest expression I've ever heard. You know what? My insurance might be affected by you in Florida, but you know what? I got a house. It's about 1,300 feet above sea level. You're fucked, not me. Fuck around, find out. If you aren't willing to look, listen, anything, you want to sit there and deny it and live on the coast? Best of luck, man. I wish you the best of luck.
So last question for you, Josh. We're talking about the stock market, what's wrong with it and stuff. I want to kind of go rich dad, poor dad on you. Mm-hmm. You know, the wealthy seem to start their kids off pretty young with the concept of the stock market, saving money, investing money. What can the people with a little bit less, the middle class, be doing to actually help prepare themselves and their kids for the future?
I know that a lot of people are underutilizing right now their 401ks and their IRAs. Obviously, that is not through any fault of their own, and I understand that the economy is a little rough right now, and it's hard to put into those types of programs. But tax deferred assets like that are really critical, even at little amounts. Even if you're putting in 1 or 2% of your check every month. Like we talked about, those things are going to compound, and they're going to generate larger incomes down the road. We also talked about Robinhood and how that was an easy platform in for people who didn't really know the structure of the market to invest themselves. I think both of these ways are great platforms for people to start their knowledge to the market. There's a lot of free resources on the internet. I tell you, even ChatGPT nowadays, it does some really good, really nifty stuff if you ask it the right questions. And I think that is one of those things where AI can start to help people, and AI is one of the things that can help the lower classes. If you know how to treat it, it can tell you what you should or should not be investing in, right? Case in point, before we came on here, I went in and I was asking it about utility stocks and different industrial stocks, and it will break down the stock market in real time, and it'll tell you how it feels about it, why through the policy changes and directives you should invest in it, and all of these things. And I think through these tools that are underutilized right now, that it's going to be a really nice way for people to start to invest in the market, which regardless of if it's like you said, rich dad, poor dad, even if it's $10, $20, $30, compounding it even at 10 to 15% annually is going to make you more money than it's sitting in a bank that's generating less than 1% of an interest rate.
Absolutely, 100%. And that's the other thing too, is that I highly agree with you on the 401ks, your Roth IRAs, all that kind of stuff. The only thing that I dislike about the Robinhood is that it's just so easy to pull your money, especially if you get in a tight spot. So you lose that compound, you lose that investment, you lose it all. It's one of those things that is too easy to touch. At least with like your Roth and everything else, you get penalized when you do take it out. So I think that's great advice, especially if you've got like a match program with your work like I do. Definitely utilize that. That's free money. I mean, my company offers 5%, so definitely try to match your company. Yeah,
and similar, we advocate to start even investing when we have a new employee on board with us. It opens at 6%. Hey, we automatically start at 6% to invest in your account. If you need to pull that back or move it forward, here's your account rep, and they can do that for you. But it's all, like you said, it's about moving forward and helping the next generation get that generational wealth or become wealthy, so they can continue to pass that lineage down. There are a lot of millionaires and billionaires now that were just in their garages, not more than 80 years ago. And so it's really important to remember that in a capitalistic society, if you are getting those extra dollars through that investment, it's not only is it money that you've invested, but you can also borrow against that money too, right? It's still net capital that you can borrow against to have a short-term liquidity flow, just like a HELOC on your home. If you have an investment purpose for it, and you know that is going to be able to substantiate enough to pay the loan off itself. If you're investing in a stable market that is at 10%, and you're paying a 5% interest rate, you're net making that 5%, and you're just paying yourself off your investment that you've already got. And I think people don't realize that they can do things like that. We aren't educated that way in high school, and even unless you're course specific in college, you're not going to learn about those types of things. And that's probably something that should be brought back, especially now more than ever, so kids can learn those types of things. I know in high school, we had finance class as well as home ec, and they both kind of touched upon those types of ideas of compounding interests.
To an extent, but I mean, It didn't touch much. I mean, the most I got, we took the same class. So, I mean, the most thing I got out of it was how to write a check. I mean, they really didn't go into detail. And I mean, are the schools failing children by not teaching them this kind of stuff? Because we've touched on how they're failing with like the trades industry and everything else. And not doing that anymore.
I think, and I only get the downstate, right? I only get rural. I don't know how urban does. I don't know how the bigger schools are teaching high school. But I know just from like a position of where we are or where I am. The problem is there's just not enough teachers to fill the places to educate in that manner, right? It's a shortage of teachers. It's a shortage of supplies. And I'm not saying that that's a reason to not teach those types of things, but it's to create the programs, incentivize the programs, get the capital, find the teachers, all of these things that require capital that the trickle down doesn't offer to the people who need it the most, right? We see the Department of Education in conversation all the time, and their bloated budgets and everything. And when you really dig down into it, you see a lot of that sitting in the administrative cost, right?
Absolutely.
You see that sitting in the principals, the superintendents.
What is it, like 80% or something like that sitting in that?
Yeah, it's it's a real high number. Yep, right. And it forces these people that are teaching basically our future generation, our future in itself, to have to spend their own capital to invest in these children because no one else is investing downwardly into them. And that's why I assume that's why you see the lack of growth in our education numbers and through statistics and our scores and the general degradation of our education system. It's not because it's a capital problem, it's a capital allocation problem. If you double pay your teachers what they're getting right now, I guarantee you're going to have 100% more teachers come next year, and we're going to have a thriving education system. But we don't look far enough back and try to base ourselves and say, okay, these people need it to better us in the future. We say, okay, right now, what can we invest in? We can give NVIDIA another tax cut. Great, let's do it. It's not, we just don't invest in the right portions of our lives. I mean, as a country, I guess would be my point.
No, it's a good point.
Can you speak to a second for what delta exists if you have a fiduciary obligation to shareholders versus people? Like what you're doing. And the argument that I'm going to make is what you were just pointing out, the opioid crisis. That brought a huge surplus to doctors and pharmacists. That pushed a real thing. That arguably was a point of contention of the war in the Middle East. Do we stop forgetting about who it might affect in the future just so that we currently have something to figure out in that casino that we talked about earlier?
I think that's the problem, right? Everyone cares too much about the casino and not about the broad scope of the real world and the individuals and the civilians and the humanity of it all. It's really just a disconnect, and I think that's more of a U.S. thing. If you go into your Scandinavians and stuff, it's a little bit different over there. The culture's just a little bit vibed different. But yeah, I mean, we invest too much in the casino, like most people do, and unfortunately that hurts us on the back end. And so then we try to scramble to figure out how to fix the backside of the problem, and now we're going to do that through the dismantling of the education system. And so it's just. It'd be nice if, my argument is if we had a third party, a substantialized third party, you wouldn't have this 4 years here, and this back and forth. There'd be a way to continue the pathway, forward in an elevation change. But when you have two parties that their sole goal is to cancel the policies of the previous 4 years and then stagnate, it doesn't allow for the country or for us to move forward in the way we should. So with a third party, at least there's that balance where they can't be like, oh, it's this or that, right? There's a middle that can kind of break everything apart. And you see that like in Norway and the Swedens, right?
That
they have,
sounds crazy to me because you're saying it's black or white. There's no possible gray. And right. I would argue in the financial market, it's clearly black and white. There's no gray in the finances anywhere ever.
That's red and black.
Black and red.
Oh, sorry. Black and red, no gray. But
and the casino too.
What we just clarified, what you guys clarified is like FTX and all of those kinds of things. There's no gray in the financial market. It's all black,
right? Exactly.
Or red.
Exactly. Yeah. Well, do you have anything else to add, Josh?
I would just say, just to touch on what we've talked about already, listeners should always invest. If you have a platform and a means to invest, even the smallest amount of dollars, it's great for the longevity of you, your livelihood, and your family's livelihood. Be sure to be careful in the current climate. Investing, like we discussed, maybe don't put all your eggs in one basket right now. But if we do see things, stabilize, it could be a really nice spot to pick some things up, like Nvidia, as we have discussed, or some of the beat down bank stocks. But elsewise, it's just probably more of a in our room we call it sit on hands, right? Don't touch the buttons. Don't do things just to be doing things. Let your money be protected just for a little bit if you have that option.
Yeah. So what we'd like to do here is just like a quick final thought as we wrap up. So I'll start with Ken-Zee. Ken-Zee, what is wrong with the stock market?
Oh, fuck, so goddamn much. Josh, I'd rather ask you one question here, just straightforward. I don't need any anecdotes or anything else. Based off of your knowledge of the current of the market over time and where you currently are, and obviously you have serious success here. No offense, like you're good at what you do. Peacetime, wartime, one way or the other, would you put your money into the Dow 30 and the Northrop Grummons and Lockheed Martins right now, or would you put them into the metals company where we're looking at Canada-based companies to explore the oceans in peacetime rather than wartime?
I think that metals is an interesting prospect right now. Elon had talked for a while last year about putting a refinery actually down in Texas, maybe Galveston. I can't remember the exact town. But what he wanted to do was bring and find processed rare earth minerals within the United States, refine them there, or import them at a cheaper cost and refine them in the U.S. to make it a U.S. product. And by doing that, it alleviates the tariff aspect of it. And so I think that if you can find U.S.-based companies to do the things that the other companies or the other countries we used to rely on to do for us, that's a really nice niche right now. You're thinking you got to be talking like lumbers, rare earth minerals. Natural gas right now is really starting to pick up. There's talks with the EU about maybe canceling off a tariff by a certain measure of natural gas export. And in general, just your precious metals as well as an asset class, because they're going to fight through inflation if it comes a lot easier than like a stock market for you.
BlackRock, they wanted to start a stock market of their own. Do you see that coming to fruition?
Yeah, that was the one in Texas, right?
Yep.
Yeah. Honestly, probably so. Just for tax incentivized purposes. And then you're also moving into a Republican-based state, so I assume that the laws are going to probably have a little bit more laxity than you have in the current New York-based system. Also, talk about building a casino, right? But they're the house. So they've made it through. They've bought all of the properties, and now they're just stacking casinos on all of them.
Wait, does the house get a cut?
Oh.
Did I misunderstand a part of this?
I would say they've got a stake somehow in it.
Did I got played? The house gets a cut?
Hate when that happens. So, Josh, final thoughts. What's wrong with the stock market, my man?
Well, like we've discussed, it's weighted to be tops, and the problem with having a top-weighted stock market is that everything can collapse on itself when things go rocky and awry. I think a lot of people think that it's a manipulated market, but they just don't understand it as well. And through that situation, it makes it a lot easier for larger players to manipulate it versus smaller players, like we've already discussed. You have a 10% bounce today, and you telling me that the hedge funds weren't already loaded up for that yesterday. You don't think that the news prints, we just stopped tariffs. Come on now. Everybody, somebody got that phone call, and so you're going to see there's that manipulation, and there's just no one to really reinforce that anymore. You know, you had the Pelosi's of the world doing it, you had the Sam Bankman-Friedmans, and now you have, I mean, basically the president of the United States and his cohort, Elon Musk, telling people how to buy and sell stocks to literally manipulate the market to get us to a rate that we want. So, like, really, where's the checks and balances in a system that is supposed to be about security and everything being checked and balanced at all times?
That is definitely a problem with it. I mean, I like the outcome. I like lower interest rates and everything, but
the house always gets a cut.
That it does. So, Josh, I want to thank you for coming on here. I really enjoyed the conversation. Thanks for taking your time. I know you're a busy person. You're welcome on any time. So I just want to thank you.
Oh, no, thanks for having me, guys. It was a really fun talk. I didn't really know what to expect, but it was a really fun time. I hadn't talked about a lot of those topics in quite a bit of span. So thank you so much for having me on. And if you ever want me to come back and just with you for another hour and a half, I'm always down.
Absolutely. Well, I appreciate it, Josh. You have a good night, and I'll talk to you soon, bud.
Thanks, guys. Have a good one.